This is Derek from Trade Technicals Blogspot, and what I have decided to do with this video is go over some strategies as far as stocks are concerned. I was going to put this in the ebook that I have on my blog. I said on the weekend that I would put this on a video. And here we go. So these are some strategy tips used for predicting winners on stocks. So the first thing is, if you are trading the stock market in any form, whether you are trading options, whether you are trading stocks itself, even if you hold a 401k, you are gambling, taking a calculated gamble, that is. But the more you work towards it, the more success can be determined. And the biggest thing is, ask yourself a few questions when you are trading. The first one is what is the message of the market that you're seeing different, whether you're looking at a technical and or fundamental level? What are some of the messages that you have? Sometimes even writing stuff down can help really big. Another question to ask yourself is, what do you see going up or down really big over an X amount of time? And then you got to decide, X being how much time, 1 week, 1 month, 1 year, whatever. Big, how is big, what percentage, which ways are you playing it, because like the Direxion funds, for example, have higher yields. And what is the fund? Is it like a particular stock itself? Is it an ETF? I mean, there's just so much that is available to be played at this casino game we call the stock market. What kind of prices are you being offered, whether you're playing the options? What type of price changes can you have on the short term? Can you get a better price later this afternoon? Should I wait in the morning? If it happens to against me, I'll just say pass on this play. Different stuff you can tell yourself there. Is there any good hedges you can see for your play at this moment? That's something that my ebook has been talking about, is different kinds of hedges that are available for if you're playing stocks like the FAZ, holding a 401k plan period, or any type of long stocks for a stock market crash, and so on. Calculating risk versus reward. Spreadsheets do an amazing job at that, but even just having a calculator nearby or doing the numbers in your head, if you can do it, see what the potential availables of risk that are there and the potential available of reward that is there. Say, for example, the one thing that I said in the ebook is that FAZ, the triple short financials, is an amazing play, risk reward, but the risk can be really high, but so can the reward. So your risk reward has to have you to be able to handle losing that kind of money. And that means it's not a surprise if you lose 50-60% of your bankroll. The more that you're stubborn as far as holding on to losses, the more you're actually able to lose with it also. So it's something to decide. So now, say if you wanted to play the stock market, what should I do? Well, the first thing, going long on the stock market. Well, the stocks are very high right now. If you're going long at this point, there's a great chance that when you look at your portfolio in a few months or a year, you'll be like, why did I buy at this time? This is the point where I should have been selling. This is the time where I should have been shorting, when we've seen so many stocks going up like 40-50%. But when we look at the monthly term time frame of many of these stocks like the SPY and the XLF, we are seeing that there could be some potentially large gains that are rising over the next little while. Hyperinflation is also a concern, and with hyperinflation can also bring higher stocks. So that is one reason to be going long. If you want to go short, you would be fishing for a bottom in the funds like the SKF, FAZ, DXD, QID, SDS, SRS, yada yada yada. There's so many of them. And like I say, I think it is a good long-term risk-reward play, but nonetheless, you are fishing for a top, and you could wait for trend lines to break, you could wait for moving averages to work in your favor. But every time a trend line breaks, a moving average does something significant, the next question is this going to be some sort of bear trap, bull trap? And that can also put you into play. Are you going to be putting stop losses on it? How is your risk for the play going to work? A bunch of more questions that you should be going through also. Now, should you care if you are going long or short? Well, as far as trading like an FAZ or an FAS, the answer should be no. As far as putting like a put or a call for like an XLF, once again, the answer should be no. As far as shorting a company like, say, a Citigroup, the answer would depend on your style, because when you are shorting a company, you put yourself with serious risk. If you short a $5 company that goes to $20, you are completely ruined depending on your financial situation. Where if you're playing a long fund like an FAZ, you can see this go from $4.50 to $18, $25 and make a major gain, but your risk is only that you put in. Same thing is true with options when you put your risk in with options. That's why it shouldn't matter if you're going long or short, because it's all a casino game. It's like having like black and red on a roulette wheel, or the home team or the road team when you're betting on a football game. And that's exactly it. Casino playing this, it's like a casino. You are gambling for a direction. You think something is going in a skill-based game. People say, well, it's an investment to go on stocks. And then I ask myself, well, what is an investment? Investment is trying to make a gain on a good that is a surplus, or good, whether it's money, from the original date of the investment. If you are a day trader and you have a day trading account of 100 grand and you were to make $400 for the day, if the inflation for the actual particular day was 0.4%, you would in a sense be breaking even. Of course, in reality, most people would have lost, so you would have done well nonetheless, and usually the inflation on a daily basis doesn't get that high. Nonetheless, when you are investing against inflation. If you are buying real gold and silver, you are investing against inflation based on when you buy it compared to when you trade it. That, to me, is what investing is all about. Say, take a player in poker like a Phil Ivey, Phil Hellmuth, or a Daniel Negreanu. These guys go on poker tables, go to tournaments, and win a lot of money because of their brain skills, their skills in order to outplay the people they play against at the poker table. And that's exactly it. So for them, it would be investing, but for most people that play poker, it is a leisure activity that they usually have to pay money to people like him and the casino to play, because in the casino, you got buy-in for poker tournaments, you got rakes. The same is true with the stocks. If you're looking at a $100 stock, it's like $100.20 to buy it and like $99.80 to sell it. That's like the bid-ask ratio spread. But not only that, but your brokerage fees are going to charge you a commission every single time that you do a trade. Those are your house VIGs, if you will. So you have to do better as trading to beat that situation there. Now, with inflation, everybody is fighting inflation. So every game that is possible to be played has to handle the situation. So if, for example, if you are playing poker and over a decade you were to gain this X amount of money, you have to determine how much more you are making over inflation. So that means you have to do just a little bit better. So I would presume someone like Phil Ivey would be beating inflation as a calculated guess. If you were doing a job that used to pay $10 an hour that now gets paid $15 an hour and inflation has tripled, you're in a sense losing. But don't feel bad, because everyone, or a lot of people, are going through these same type of situations during this current economic collapse. So in conclusion, the stock market is a casino. If you think you can defeat this game, then go right ahead. Trading stocks is in the top of my list of games that we can beat. Number 5, I think, is roulette. I hear there's somewhat strategy of beating it based on where the ball is thrown from. I don't know too much about it, nor have I tried it. Number 4, sports and horses, as far as picking sports. Number 3, blackjack. You need to count cards in order to do that, or have massive positive energy, aka law of attraction. Number 2, playing poker. And number 1, stock trading. Now, of the top 5, only sports gambling and stock trading can you actually get help from other people to get information. So if you were to say be buying sports picks and you were to spend $20,000 for the service, you would have to make a little bit even more money to become a winning player. Same thing when you are paying for somebody who's giving you stock information. I hope this video helps. Have yourself a great day, everyone. Bye-bye.